This video is going to talk about TradeDay, the rules that they have, and how to actually pass, along with a few tips and tricks, assessing some of the markets that they provide to see if it might be something that is going to work for you or perhaps not. We're going to look at some of the pros and cons, in particular comparison to Apex Trader Funding, which I do have a video on as well if you want to check that out. But let's dive in. I'm here on the website for TradeDay. So this is what it looks like. And I'm going to go into how it works. Because first of all, when you're choosing a prop firm to work with, you really want to understand what the rules are, how they work, and if you can feasibly pass it based on your own skills, knowledge, and that kind of thing. Basically, how it goes is you go into a test after you purchase an evaluation. You need to make a certain profit target based on the account you select, and you don't want to lose more than a certain amount. Now there's a few more rules that I'm going to go through as well. So here's the 3 objectives. So after I hit how it works on the website, I scroll down a little bit and this is what it tells me. So first of all, I've got to make money. I've got to make a profit based on the account, and it'll have a certain profit target which I need to meet. We'll go over that shortly. It also says you need to trade for a minimum of 10 days. So basically you need to trade for 10 days and meet the objectives. So I'm going to talk about this in a little more detail soon as well. And then we've also got the rule of be consistent. So basically this wants you to not just get lucky on a particular trade, and then they do assess whether you get in and out really quickly like you can on Apex. So on Apex, for example, you can jump in and out once you're above the profit target in an instant, and they will accept that as a trading day. However, with TradeDay, I believe they do actually assess it as not a trading day if you've done a bit of a dodgy setup, like getting in and out. You've got to actually make it look like you're trading properly. So no single day should have profit of 30% of the total profit. So what does that mean? Let's say the profit is $1,000 that you need to meet. That's your target. Each day should be no more than $300 of profit. If there is a day that is more than that, say 350, you're actually going to have to make more than your set target, because that 30% is now having to be at a minimum of the $350. So that bumps up your total required profit, and basically it just means that it's not worth going over the 30% per day of total profit, because it just makes it harder for you down the track. So that's how they structure their consistency rule, and basically it incentivizes you to close out your trades on or before hitting that 30% of the total profit, which at $1,000, for example, that would be $300. You don't want to go over it because you're going to have to beat your original profit target. It'll probably bump it up by whatever the figure is that makes that current, say $350, if that's what you make, making that a 30% or less trading day. It just pushes everything up. So you don't want to do that. Make sure you put a profit target in as a very maximum at that 30%. You don't want to go over it because it's just going to make it harder. There are 3 rules to not break. So trading at permitted times. You don't want to hold positions over market releases, and you want to also close all your positions before the market closes. So when I click on learn more, for example, that will take me to the products and times that I can actually trade. So each product has a link that you can then go and see what the trading times are, and make sure that you're going to get out of each trade in the required time. So when you're looking at the permitted times and that kind of thing, you probably want to have an idea of what products you want to trade. So the next section is permitted products. This outlines the products that you can trade, and I'm going to go into that a little more detail further on, but depending on what you're going to trade will also determine what times you'll be able to trade and what times you'll have to be out of the market before it closes. On the dashboard, it does show you some of the tier 1 market data releases so that you can keep on top of that when you're trading. So you just open up your trade date dashboard. So that's easy enough to keep track of. End of day trailing drawdown. Don't lose more than this amount. In comparison, if you're familiar with Apex Trader Funding, the drawdown goes up with a live trade on that very day, which means that in Apex Trader Funding, your trade can push you out. It can go right up and then come back down, and within that same trade, it squeezed you out with a trailing drawdown, which in my opinion is not really an ideal way to structure it, because you're always having to adapt and assess where your trailing drawdown might be and have to pull your stops up higher and higher as the trade improves and goes on in your favor. I don't really like that personally, and even if you had a trade at stops to break even with Apex, the market can still go right in your favor and then pull back, and you can still get cancelled out of your account even with a stops to break even trade, which I think isn't really that great. For trade day, on the other hand, it assesses the trailing maximum drawdown on the end of day trading balance. So for example, you close out all your trades, you're $100 up. The next day, your trailing maximum drawdown will be $100 higher than it was the day before. It's going to pull it up the next day. So rather than on that same day, it's going to squeeze you out of your own positions and your own trading on that particular day. It's going to let you close everything out and start fresh on the next day with a fixed trailing drawdown. Now this is much better because it means that you know for the start of that trading day and throughout that day what your trailing maximum drawdown is, compared with Apex where it does fluctuate during that trade. So if the market spikes up a little bit and you don't perhaps realize, it could squeeze you out without you even knowing while you're holding that one single trade. In terms of trade day compared to Apex Trader Funding, I think that's one of the biggest factors that makes trade day really quite a valuable prop firm to be with, is because they don't squeeze you out of the valuation on that same trading day if you have a really good trade. What does keep you humble when it comes to profits is this 30% rule. So you don't want to go too hard on any one day, and it's just going to make it harder for the remaining days. So for example, let's say your target's $1,000, you hit the target in one day, that $1,000 is then going to have to be a 30% portion of your total profit, meaning that you're going to have to get over $3,000, for example, closer to $4,000 profit rather than your single $1,000 profit, because it's just going to bump up your profit target. Now, if you break a rule, you can reset the evaluation for a fee. That fee at the moment, at the time of this recording, is $99, and it's all in USD, the pricing on trade day. So the rules are pretty cut and dry, they're fairly clean, and they like to operate in a pretty professional manner so far as I've seen. So that's really good. Payouts. Keep your first 10,000 and then 90% of the profits after. No restrictions on withdrawals. So a couple of pros and cons here in comparison to Apex Trader Funding. So trade day lets you keep 10K. I think Apex at the moment lets you keep up to 20 or 25K. The other thing is Apex Trader Funding limits your withdrawals as you go through the first few months, and there's a couple of almost targets that you have to reach in order to actually get your payout. Trade day, on the other hand, just lets you take your money and that's it. So you don't have to wait around, you don't have to and ah whether you need to hit certain targets and that kind of thing. If you make the money, obviously you don't want to withdraw into your into your minimum balance, giving you no room to trade. You can manage that yourself, but if you do make some good profits, you can take them out. So no holding you back. The more money you have in your trading account, the bigger the positions you can trade. So as you scale up and you make more money, they do actually scale your ability to trade, so giving you more volume that you can actually trade on pairs. So that's really helpful, that you're not stuck with that fixed account. Even if you're going really well, they're going to allow you to grow and scale with that company. So TradeDay has a lot of benefits, particularly this end of day drawdown rule. It just means you're not getting squeezed each time you place a trade. It's a much better way to actually structure the trailing maximum drawdown. That's effectively all of the rules. So I'm going to dive a little bit deeper into the products. So I'm just going to hit learn more, see if that takes me into where I want to go. It does not. It goes into a deeper explanation of what I've just talked about, which is all good, but it's not what we're after. We go pricing up the top, and I just want to see what accounts there are and what sort of profit targets I need to reach. Understanding that I need to use those rules to my advantage. And what we have here is a 10k tier, 25k, 50k, 100k, 150, 250, and back to 10k again. So we have everywhere between 10k up to 250. And let's have a look at the pricing as well. So starting at the 10k, we've got 99 US a month to access the evaluation, and what we need to do is reach $1,000 of a profit target and trading at a minimum of the required days. Always keep an eye on changes with prop firms. They often change the rules and that sort of thing. It is an evolving market, and they're always trying to keep up with the competition and be one of the best prop firms out there. So always keep an eye on the rules, because they do change, and I'm sure they will change following this video. So always check the actual website for the current rules. So profit target, $1,000, which is basically 10% of the 10k. Trailing max drawdown is again 10% for the day, and you can have up to 10 micros or 1 mini contract in the market at any one time. So let's break that down a little bit. We've got a 10% target and a trailing end of day drawdown of $1,000 or 10%. So you've got 10% either way. It's a really achievable evaluation in that sense that you've got to make $1,000 before you lose $1,000. If you can make $1,000 over a reasonable period, which is quite feasible, I believe, then the $99 fee is really worthwhile, because if you can make $1,000 over the period, then even if you only make 1/10 of that, you're going to be able to cover the fee almost. Obviously, considering that you've got to have money in there to trade before you withdraw it and that kind of thing. One thing to remember with the profit target is that over the set of 10 days, you don't want to make more than about $300 per day on your way to this profit target. If you make more than that, the profit target will start to creep up, and you have to make more money on the following days. And basically what that means is those following days, they have to decrease the total profit comparison percentage of that big day that you've had to bring it from, say, if it was 35%, these future days have to make that day lower than 30%. So slow and steady, use up your days, and don't go over the profit target. Make sure you close it out. Have your maximum profit target set so that you don't actually get spiked into a huge profit, because it will really make your future trading a lot more challenging. So 25k tier. Again, we've got a 1-to-1 profit target versus trailing max drawdown. So you've got 20 micros and 2 minis. So that means, for example, on the minis, you can place 2 trades or 2 orders compared to just a single one. So you do have a little bit of potential to perhaps scale into a trade, and aiming for that $1,500 target. That's an extra $26 US per month to access this one, and the value you get is basically you've got to make an extra $1,500. You've got the same equivalent trailing max drawdown to the profit target, but you've got an extra position that you can actually place, which may make it easier. It may add more risk, so just depending on how you trade, if you only need one micro, perhaps you'd want to go to the 10K, but if you want two and you want to have that option to get in and scale again if you're on a good trade, the 25K tier could be the option. Moving up, so most popular 50K tier, it's 165 US a month, and the profit target is 5% of the total value of the tiered account. And the trailing max drawdown though is actually $2,000, so it's a little bit less than the profit target, but you get access to 5 potential positions, so 5 minis or 50 micros depending on what you're looking to trade. So 50K, you're paying an extra $40 on the 25K tier, and you've got an extra 3 potential positions based on the minis. But one thing to note is you've got a little bit less leeway on the trailing max drawdown, so it's something to be aware of. Up to the 100K tier, so we bump up to 275 US a month. It's $110 more on the 100K tier. It does double the contracts you can use in terms of the mini, but it's still set to 50 micros as a position limit if you're trading the micros. So if you're trading the minis, it doubles the positions. Trailing max drawdown, the variance is a bit bigger. So you're looking at 5% target again, but then the trailing max drawdown is a 2K difference, so $2,000 difference, or 2% of the total account, compared to 1:1, so like $1,000 versus $1,000 on the 10K. So you've got a bit more disparity there coming in. If you're going to obviously stick to your trailing drawdown, you're going to sort of slowly creep up and make your way to that profit target. And obviously understanding that you don't want to make more than 30% on any one day, it may be viable for you still. Best value, according to the website, is the 150K tier. So it's $350 a month US. The profit target is $7,500 and the trailing drawdown is $4,000. So you get an extra $1,000 trailing max drawdown compared to the 100K, but you've got to make an extra $2,500. You do have 15 mini positions to be able to place, but you're still stuck at 50 micros as a position limit. So if you're trading the minis, then you get an extra 5 contracts. And finally, we've got the 250K tier. It's $750 a month, but remembering that you can do a reset for $99. So let's say you go for this bigger target. It's $750 for the month, but for $99, you can reset and start again. So the profit target is 12K and the trailing max drawdown is 5K. You've also got 25 mini contracts, which is an extra 10 on the 150K tier. You also get free one-on-one coaching. Now, if you're starting out trading, or even if you're quite experienced and you want some coaching, you want somebody to perhaps keep you accountable, that kind of thing, the 250K tier is probably going to be cheaper than some of the education programs that I've seen out there. I see programs around 15K sometimes, a lot of them around 5 for very basic knowledge, all the way up to 20 and 25K for that more advanced coaching, that one-on-one style information and accountability. Where a lot of people go wrong with their trading is actually not in the analysis, not in understanding the markets, but sticking true to their trade plan, keeping their risk management in practice, and not responding to the emotional, physiological responses that come with trading small or large amounts of money, particularly larger amounts. It can have an impact on your physiological response. Your heart beats faster, you might start sweating, you start to rethink what you've done, you get in and out, you revenge trade, there's fear and greed. All of those things, if you have a coach, it may be what changes your entire experience as a trader. So the 250K tier, it is expensive, so $750 USD a month. Remembering that if you do fail, or you breach one of the rules, you can pay $99, get a reset, and you still go for this 250k tier. So in my mind, the value of this fee here is reduced heavily by the concept of having free one-on-one coaching, which is highly valuable, but also the ability to reset for the same price as what a 10k tier trading account would be. Obviously a big jump. It's only something you'd probably do if you were quite serious and you want to actually make money out of trading. The only downside I would say is that the max drawdown is less than half the amount of the total profit target, which is a pain, compared to the 1-to-1, which is the 1k profit target and also the 1500k. But then it starts to kind of vary as you go beyond the 50k tier. So I'm back over to the how it works. I want to check out the permitted products and just run through a few things that I think are important to note when it comes to TradeDay. So you trade in TradeDay with TradeDay. So if you've watched my TradeDay videos on Apex, this will be very similar. All you do is log in. It's much easier to set up than dealing with NinjaTrader, the platform, or Rhythmic, or that kind of thing. So jumping straight into TradeDay, using your logins that TradeDay give you, and you're in, you can actually trade. So really nice and easy to set up. That's why I haven't made a video on that just yet. And I'm just going to run through the allowed products that TradeDay offer. So equity index futures. So an equity index is, for example, the S&P 500, the Dow Jones, those index markets that you see on the news. They talk about effectively the global economy or the economy for that particular country. So the Dow Jones is the US, the DAX is Germany, the FTSE is London, and the ASX is Australia. The CAC is the French market. So it's basically the top companies that are listed in that particular country. They're made into an index, and then that index is effectively given a value that people trade. So equity index futures contracts. So we've got the S&P 500, so that's US, the NASDAQ 100, it's a US one. NASDAQ again, the Russell 2000, it incorporates 2,000 companies. The Russell again. Now these are all US markets, US index markets. That's trading in the US session. If you want to trade in the Asian session, which depending on your location and your sleep patterns and your work, that kind of thing, if you've got free time during this Nikkei session, it's not actually offered on Apex Trader Funding. Anybody that is available to trade during the Asian session, this is the Japanese stock index market, incorporating the top 225 companies by market capitalization. So that's the Nikkei versus USD futures. It's at a different time to all these other ones. One thing I want to quickly point out is that this index market futures is the only one that's outside of the US session for TradeDay. The advantage that Apex Trader Funding has in this case is that it does give you access to the DAX if you pay the additional fee. So you've got to actually pay the additional fee to get the data, and then Apex let you trade the London session or the European session. Having the Nikkei included is a really great benefit. You don't have to pay extra. One thing to note is the $25 tick size. So if you're trading on those smaller accounts, it may be a very tricky market to navigate because each tick is worth $25, and in about 12 ticks will be at that $300 mark. So trading the Nikkei, you just do need to be aware that it is a big tick size and the market can move quite quickly as well. So you've got, for example, the micro E-mini NASDAQ futures here, they're 50 cents. So the Russell and the NASDAQ micros do allow you to trade in and out at around 50 cents, but just, I believe TradeDay do examine whether you've placed a trade and held it for a little bit of time before closing it. I think they might assess that because Apex Trader Funding, they let you get in and out instantly and they count it as a trading day. So trading these ones, the MNQ or the M2K at 50 cents per tick at the minimum lot size, is a potential way to keep your risk down. So it's one thing to keep in mind, but the Nikkei at $25 a tick, you don't have to get too many ticks right for that trading day to hit that 30% target of the total profit. We've also got some FX futures pairs, so you've got the Aussie dollar, British pound, Canadian dollar, euro, Japanese yen, Swiss franc, which is known as the CHF in a lot of your CFD charts, and the NZD or New Zealand dollar. They've got the tick size here, which is really helpful. And below you've got the bond futures. If you're into bonds, it's not something that I'm really aware of in terms of how they function, that kind of thing, the best way to trade them. So they're there if you want them. Energy futures, so you've got crude oil, natural gas, and a couple of variations there. All your tick sizes are here along with the contract code. So I've done a contract code video on Apex trader funding, so how you read and understand them. But basically you've got the code, and then you have the month or the quarter, which is represented by another letter. And then it's also followed by the year, which will be either 24 or 4, depending on what system or platform you're using. You've also got metals, so you can trade copper, gold, silver, and a couple of variations in the micros. Taking note of the tick size there as well. And then finally you've got agricultural futures, so lean hog, live cattle, soybean, corn, soybean oil, soybean meal, and wheat futures as well. So if you know about your food and your livestock, this could be a really good option for you as well. Now, checking the data feed, some of these are on CME, some of them are on CBOT. Now, if you want to add level 2 access, so that's when the order book shows you where the limit orders are rather than just the current price bid and ask orders, which is level 1. If you want to see that increased depth, then you do need to sign up for the level 2 data when signing up for your evaluation. If you don't know what data feed it is, you can come to this page, which is the permitted products page, and check the data feed that it's on. So for example, the Nikkei, if you're in the Asian session, is CME. All the Forex pairs are CME. They're available here. And then you've got different ones. So a lot of people trade gold. So that's the COMEX feed. And that's about it for the permitted products. Just going to go into the holding positions section. So exit all positions 10 minutes before the close. You don't want to hold it over the market close. For a list of closing times on the CME groups, you can click on the link. So it does give you information on how to find the trading times. If you know your markets though, you really should have a good idea of the opens and close in particular. That's definitely really an important one, but you should realistically already have a pretty good idea of the open and close times for your market that you're going to trade. There's no upper time limit, so you can keep trading for as long as you need to, but they need to see at least 10 days worth of trading data before you can be evaluated and get into a funded account with TradeDay. So here they mention about not just entering and exiting a one lot micro. It says here required to continue in the trade style they have been trading. So you do need to just keep trading as per you have been previously and make sure you get through according to this rule. So really sort of highlight that you don't sit there and trade a one lot micro in and out just to keep that risk down. You've got to keep trading as you have been previously. So if you do sit and scalp on the one lot micros waiting to pass, they may extend the evaluation period beyond the 10 days. So they might want to see the additional days properly traded, and they're going to say, hey, look, you've changed what you're doing just because you've passed. You haven't passed, we're going to extend the trading days. It's a reasonable expectation. It is just a little bit annoying. It's probably the drawback in comparison to Apex Trader Funding, where they don't actually assess that. You can get in and out in an instant on your micros. That's fine with Apex. TradeDay, they don't accept it, and it is what it is. One other rule I have heard mentioned for trade day is a 20-20 rule. So the 20-20 rule basically means that you can't use up 80% of your total drawdown within a day, otherwise that'll be a fail. So I'm not sure why it's called the 20-20 rule. It doesn't particularly make sense to me, that term, but that's apparently what it means. Is basically once you're funded in particular, you can't come down from the top and go all the way down to your max trailing drawdown within a single trading day. You've got to have at least 20%, so there's the 20. You've got to have at least 20% drawdown left in that particular trading day. Otherwise, it will be a fail. That's my outline of trade day. I hope you found this helpful, and I hope you found a couple of little tips that might help you pass or at least understand the rules a little better. Jump into the comments, guys. Let me know what you think the best value account is. I'm always interested to hear other people's opinions, because sometimes there is a better way than what I've noticed, and I'm particularly looking for value and looking to get the most out of my prop firm challenge. One thing I didn't mention is that trade day at present only allow one account. So that's a big disadvantage compared to Apex Trader Funding, which allow you up to 20. Trade day at the moment only give you one account. So obviously when you're choosing an account, you can't just get 20 of them. You have to go with one. For example, for myself, I do prefer to go for the bigger targets and the bigger amounts and use that benefit of the cheaper reset fee in comparison to just the once-off monthly price. It gives me the ability to use a lot more minis and scale into trades, get out as per I like to, rather than relying on that one position and basically trading that single position and being held ransom in some cases to that one position. I can't really navigate further. The 250k tier for me is really good value. The only thing I don't like about it really, other than the price, is the disparity between the profit target and the trailing max drawdown. When you think of the daily movement though, you're only looking to make 30% of the total profit target, which is a little over $3,000 per day as a maximum, while you can't lose more than 5,000. So in that regard, there's a bit of leeway per day, but you really do have to make good on that second day. For example, if you're going for that full sort of $3,000 swings or thereabouts, in order to hit your profit target without breaching that 30% rule and keeping within your trailing max drawdown limit. Plus you get the coaching. Using your resets, using the coaching, and aiming for that bigger dollar value is what I really like to do. However, let me know in the comments what you guys think. Obviously affordability is something, but in terms of value, what do you think the best account is out of each tier that they offer? That's it, guys. Hope you liked this video explaining trade day's rules, how they work and that kind of thing. Please like and subscribe if you did enjoy the session, and we'll talk to you soon.